launched at Illinois Tech. And we very much welcome you to this seminar. And I'd like to, first of all, poll and see if everyone can hear and see the slides okay. And I see some of you are calling in today from abroad. I see India as one of the locations. I see also in Chicago, so welcome. And if you have any questions at any time, just put those in the chat and I'll try to answer them as well. So hopefully you can see and hear me okay, and then we can get started. Great. So let's maybe start with a little bit of an introduction. So what's the background to why I'm speaking today? What's the driver for a rapid shift in financial technology? And that's really coming from a number of sources, but one of them is the Web3 era, which we're now entering into. So we had Web 1, we had the first era of the internet with MySpace and basic web pages. Then you had Web 2, and this was very much an evolution in terms of our ability to send money internationally, to be able to trade through an automated account, to be able to manage your money through software as a service type platforms, Robinhood, various banking platforms, etc. And now we're moving into a very different era where the power is very much in the people's hands, where it's now possible to fractionally own, a token on the Mona Lisa if you want to own a very expensive work of art, or if you want to be able to make decisions, voting like you would with dividends in a company. You can now do that with tokens and various different assets. And there are now what are known as decentralized authorized or decentralized associations, which essentially are now set up so that people can vote on various ways in which software should be run, so that the management of the software it used to be in the hands of the banks or the trading firms, for example, PayPal or Stripe or fintech providers, is now in the hands of the people. And so it's a very different world that we're entering into. AI and blockchain are part of that. And also you're going to hear a lot of about this, not only in the press, in the news. A lot of it is hype, but a lot of it is real, and it really is disrupting the finance industry. We're going to see a little bit more how that's happening. So if we focus on blockchain a little bit as a disruptive technology, this has actually been around for some time. Some early initiatives were set forth in about 2014 by a company called F Prime, and very quickly within a year they were able to get the New York Stock Exchange and various other banks, including Goldman Sachs, and here in Chicago the CME Group, which manages all the central exchanges, one of the largest exchange group in the world for commodities that are traded internationally, as well as options and stocks, etc. And we now have, following that, a very interesting period where a number of banks and credit card providers started experimenting with blockchain. And this was very early stage, and no one really quite knew where it was going to go and to what extent blockchain was being used. And then almost overnight, about 3 or 4 years ago, this area exploded. And all of a sudden it became dangerous for you not to be using this technology or experimenting with it. And through a genesis of blockchain, in particular to what's known as Ethereum, you're able to start building a whole ecosystem of apps. Like on your phone, you have all the different apps. Well, it suddenly was a world where you could plug in, instead of walking down a street in Wall Street, lots of banks, have lots of apps where you can manage your money, you can invest it, and you could do all sorts of incredible tasks and functions that you could never do before. You could surpass a lot of legal limitations, for better or for worse, which previously prevented you sending money or sharing money in parts of Africa and South America and elsewhere. All of a sudden, cryptocurrency and what's known as decentralized finance, that's trading away outside the main exchanges in these little sort of small exchanges, sort of off in the corners of the blockchain, grew very quickly. And it's now a multi-trillion dollar business, or well on its way to being, depending on how you value it. And whilst it's had a little bit of bad publicity, it waxes and wanes, it goes up and down like any industry. A lot of the major banks and fintech companies are now developing on this platform. And it's, in some levels, it's very obvious. Why have real money? We can have digital currency, a stable currency like stable coins, moving around stable virtual US dollars. Joe Biden, for example, has called for this, for a US virtual dollar, a stable coin. The Chinese Communist Bank or Party's Bank has already issued a foreign currency pegged to the renminbi, which is a stable coin. And overall, it's just a very large number of reasons why companies will start to use blockchain, just in terms of the ecosystem that's already there, the quality of the technology that's available, and obviously the flexibility that provides users in terms of how they own and access. It's much more robust to cybersecurity in terms of how it's designed. And it's been designed to be decentralized so that governments or corrupt parties cannot intervene, which again is a very important step when Silicon Valley seems to be making a lot of controversial decisions about censorship and so on. And people are asking whether Facebook and LinkedIn and so on should have so much power. So this is a very much an important area, and we're going to return to this in a moment. But another important area that we're going to look at today is how big data analytics, AI, machine learning is also being disruptive in this area. And it has been in the very disruptive already, probably 5 or 6 years in particular. It doesn't mean it's too late to the party, far from it. But this also requires an important set of skills, from fraud detection using automated algorithms to do this, to how we approve and automate lending, and the kinds of information that get used now to decide whether you should have a loan using, for example, Lending Club or Prosper. There is all sorts of new innovations in how we're tracking sales and the types of adverts that people are clicking on, the ability, for example, to identify which age groups and which demographics are buying certain products, the ability to automatically customize products for you. And it goes very far into finance, since there's often a line of credit that needs to be issued for purchasing, or for example, there may be issues around fraud. And these are reasons why banks invest a lot of time and money in machine learning in particular. So what kind of jobs could you do if you had a fintech degree, for example, or a qualification in this area? You could be, for example, a blockchain engineer working at a trading firm, a big one like Jump Trading here in Chicago. You might work as a quantitative analyst with strong programming skills, focusing more on traditional markets, but maybe also crypto, where your role is more to potentially advise traders or risk managers, and maybe you will be involved with building trading and risk management technology as well, that's used across the financial institution. And so depending on your interests, whether you're more sort of engineering focused or whether you're more sort of scientific and analytical, there's a very wide range. And this is just a couple of positions. I can tell you that a few years of being in the finance industry, those numbers go up very quickly. And it's not uncommon for people to be in Chicago, for example, with say 10 years of experience, making more than 3 times that amount of money. So it is a very lucrative profession. It also comes with a lot of responsibility to be at that level. And some people like that, and some people find that life balance challenging. So it's opportunities all around the world, in London, in New York, in San Francisco, in Los Angeles, of course, in Switzerland, where a lot of the crypto valley is, for example, in Paris, further abroad, in Singapore, places like Hong Kong, Shanghai, where there's a lot of disruptive fintech innovation and banking services. And of course, further afield, banking in many different areas from outside the main financial centers, like North Carolina as headquarters for Bank of America, and so on. So let's get to the program itself, because if you were to join this program, I think you would find an exceptional level opportunity to get involved in this area and develop your skill sets to be very competitive in the job market. And so the Masters of Financial Technology that we're very pleased to introduce today is a 2-year professional master's program with a STEM designation. It has entry points both in August of 2022, which means you can apply now. And also we are allowing entry in January of 2023. I see we have people from Stockholm and also from Korea, so welcome. This is fantastic. We also allow the program to be taken online or in person, as you prefer. And we're also hoping that we'll attract students who may be working already in the industry and prefer to do this part-time, in which case, of course, the 2-year limit will take a little bit longer. And we're also trying to coordinate this 2-year program with the last 6 months being with a company in industry placement with a Chicago fintech firm. It could be a trading firm, it could be a bank, it could be a software company, it could be a payment provider. There's lots of opportunities. It's a very fast-growing area. And although there are lots of 6-week programs that won't get you to the level that you need to be at to be employed as a strong technical professional. It takes a long time, takes a lot of help. And we're here as your faculty to help you. And we have some of the world experts in fintech and quant finance. Many of them have come from the top universities and worked in industry or consulted, or won various prizes and awards, and are very well known. And so you'd be learning about algorithmic trading from Sergey, for example, about risk management from Thomas, Professor Beliki, Professor Latocci. You'd be learning about wealth management and robo-advisory from Professor Silenko. And for me, you'd be learning machine learning and blockchain. And I'm one of the leading experts in that area. I recently Quant of the Year for my work in machine learning. So let's have a look at what you would learn in this course. And you get to pick from 10 courses. There are 5 core courses and there are 5 electives. So there's the machine learning and finance course. We're going to talk a little bit about what's involved in that. There's a sort of foundational course about statistical analysis, which is actually very important because you need that to understand how to design the sort of experiments that you're going to do on data in a way that you can get back reliable results. Like, do you have enough data? Is the quality of the data good enough? Is the data sufficiently stable that you can make predictions from? Then, of course, we're going to be looking at decentralized financial engineering. So looking at how to program and build apps on the blockchain. It's a very important skill, highly employable. There is a massive shortage of people who can do this, and especially those who have knowledge of financial engineering. So a lot of software developers who can do this, but very few understand the finance that's required to build financially astute applications. Those are the ones that tend to stand the test of time, as opposed to sort of gimmicks. And we're going to see wealth management and robo-advisory. It's another important disruptive area in how to automate management of wealth. We'll talk a bit about that in a moment. And then the big one, which I think a lot of people get involved with, is algorithmic trading, building strategies for trading at trading firms and banks, and also quantitative risk management for institutions, both hedge funds and also banks as well, and to a lesser extent asset management. But those are areas where we try to focus on skills which are needed for management, and in particular of assets, and how to balance those and when to liquidate those assets, and also when to capitalize on opportunities in the financial markets. Now, there is a range of focus. It goes far beyond simply making money. You know, a lot of these services are important for society in terms of adding value, stability to the economy, in terms of providing wealth for those that traditionally maybe have struggled. Robo-advising can open up many areas. There's also many areas of machine learning focusing now on sustainability and how do you invest only in companies that you know, are good for the planet. And so it's not just a game of making people rich here. This is a very important piece in the climate problem. And in fact, you need money in order to be able to make changes in your company so that you're more robust to climate change. And you also need to be able to find the bad actors, which is what big data and machine learning can do. So let's talk a little bit more about these different areas that you're going to be focusing on in this program, the core electives, and then we'll talk a little bit about some of the other areas that you could essentially elect to. So these are the core subjects, and then we'll say a little bit about the electives. So deep learning, reinforcement learning, these are the main sort of focus areas. So in deep learning, for example, it's been very successful at being able to look at news data and be able to go through, you know, hundreds of thousands of articles, news reports, social media posts, you know, tweets and so forth, and be able to determine the behavior and the mindset of people around a certain product or stock. You know, are people happy with this? Are people liking the new version of the iPhone? And that can help you as an investor determine whether you should invest in this product or not, based on what people are saying, what people are typing Google Trends. And so it can be very helpful in being able to analyze all this vast information. There's satellite data too, and all sorts of interesting new sorts of data. When the Federal Reserve is making announcements about changes to the economy, and there's a recent 0.75% increase in the interest rate in the United States, the biggest increase since I think the mid-90s, hedge funds actually analyze in real time what they're saying, and they'll trade based on what they're saying before anyone else. So speed and technology is a major competitive advantage, and deep learning provides the ability to not only work with different types of data, whether it's speech, whether it's social media, news, it's a very powerful, flexible tool. Deep learning is also being used for automating a lot of the workflow. Traditionally, what was done manually, you know, checking for errors in the data, finding anomalies in the data where maybe there's a typo, improving pattern matching and irregularities across the workflow within banks, providing an ability to very quickly build models rather than having to use more computationally intensive tools. It has a very powerful range of use cases throughout financial institutions, across banks that will have massive reporting requirements to regulators and need to be able to, at the scale that they are at, where there's hundreds of thousands of employees, hundreds of business divisions, billions of dollars flowing through. They need to be able to synchronize a lot of their technologies across different business areas, and deep learning can be one tool for helping to sort of bring everything together, glue, if you will, in terms of looking for irregularities and so forth. On the asset management side, asset managers like to know how well they're performing and then beating the market, and deep learning can provide a tool for analyzing how well you're trading, and whether you're trading according to the rules or to some set of criteria that determine essentially your what's known as your utility, your sort of your preferences on how you're investing. And then there's a whole area of risk management and options trading, and how to use deep learning there. And you'll learn about all of these in our program. We'll get extensively involved with Python programming in particular and examples. There'll be opportunities to build various applications with industry partners. You could be working, for example, on a natural language processing tool for stock trading, or you could be working on the next generation of tools for calibrating options to option models to data. So there's a lot happening here, and it extends beyond deep learning to just machine learning. But this is also an interesting course because we're not just going to tell you how to do things. We want to future-proof you so that you understand the technology well enough to be able to use it more effectively. And that requires a deeper understanding. And we're going to actually explain why these technologies work as well with some math. And a lot of people get scared by that, but actually that's one of the most powerful tools that you can have, because it lifts you outside a particular use case. You could be using a tool that's developed for speech recognition on your phone, for example. The math will help you understand that and be able to apply that technology to finance. So it's a very powerful tool for abstraction. So there will be some math, and the math will help you to sort of understand it. What theory is there to say, when does deep learning work? When does it not work? And so this is a little different from a computer science program where you would typically just use it and maybe not necessarily understand how and why it works. And we think that's important because most disasters and catastrophes happen when people are not understanding the technology that they're using. And moreover, you might like to innovate with this technology, and it's much better to do that if you have a good understanding of how it works. And we're going to look also at reinforcement learning. That's an area where there's now a feedback from the market back into the model. So every time the model makes a decision, it changes the data in some way, a bit like a self-driving car. Once it moves, the view of the road is now different. And it's the same within finance. When you trade, you tend to move the market. You tend to affect other people as well, and they react to you. And so there is a feedback loop where your actions change what you're observing. And so this is known as reinforcement learning. And it's an area that's very popular for how exactly to place trades, for example, to optimize your execution, how to, for example, budget corporations, how to manage wealth at pension funds, and in such a way that when you make a decision, it can impact you. For example, when to consume from your savings before you retire, how much to invest. Obviously, that's going to affect what's in your bank account or your savings account when you retire. So there's a lot of interest in this area, and a good example that highlights what reinforcement learning is the classic cart pole problem. And that's, of course, this has nothing to do with finance, but the basic idea is you have a pole that's essentially, can tilt, and it's on a cart, so it can slide this way. And you essentially get to stabilize it, so to keep the pole almost completely vertical. And if the pole is starting to fall, then you can push it back, and this will bring the pole upwards, but it'll only, of course, remain there for a very fractional period of time, and it will start to tilt the other way. And so you're constantly adjusting it and then you're observing. You're observing the angle of the pole, then you're adjusting. And that's sort of what these trading algorithms are doing when they're placing trades. They're observing the market, and then when it changes slightly, they're adjusting their trades, maybe selling or buying, for example, to adjust their positions. And so that you're going to see examples of how to build reinforcement learning algorithms, which are originally developed for gaming in finance. And there's a very wide number of areas. Now, algorithmic trading itself isn't just about machine learning. And algorithmic trading is much more general. A lot of people think that algorithmic means machine learning, but it doesn't. It just means a set of rules for automating. It could be statistical, or it could just be some business logic for optimizing. So a good example of some business logic might be that you write an algorithm to look at one market price and then find other markets where that stock is trading cheaper, or that commodity is trading cheaper, and then go and buy it cheap and sell it for more expensive. That would be an example of some logic. But there are much more contextual examples that are often the proprietary knowledge of these trading firms. So you'll learn how to, for example, generate signals for trading, like when do you trade, when do you not trade. You'll learn how to design strategies which are effective across a very broad range of strategies, so that you avoid what's called crowding, where you create another strategy which behaves exactly the same as all the others, and then you end up with a concentration of risk. You'll learn how to optimally execute, a very important skill. You don't want to trade large amounts because it causes what's known as slippage, and you end up paying more money with bigger trades. You'll learn how to do market making and also back testing. And a good example of algo trading would be simply you take some market data and you take some configurations for your strategy. We'll see an example of that in the next slide. We do something with it, a mathematical operation, and then we make a decision to trade. And that's what an algorithmic trading strategy is at its core: input, output, some configurations, and then the rules that go into it, which are often proprietary knowledge. So a good example, which is not proprietary at all, but it's a very simple trading strategy, is to calculate the average or at different timescales. So you might like to, for example, take the prices of a stock over time, and then this is actually the foreign exchange rate. So this is the Euro USD rate rather than the stock price. And you might like to, for example, average it over a very long period of time. This is what's known as the slow moving average. And then what you might like to do is average over a shorter period of time. So for example, over the last week, as opposed to over the last year. And if that moving average, that fast moving average, is above the slow moving average, then you'd like to trade. And the motivation for this is to try and remove some of the noise in the financial data. So the data can be very noisy, and it's very easy to, when the market jumps up, to overreact and trade on that. Whereas in reality, what you want to do is sort of time average and essentially avoid overreacting to a particular blip in the market, if you ever watched a trading screen, for example. And so what the slow moving average versus the fast moving average does is says, in the last week, for example, is the stock performing better than it's done over the last year? That could be a useful, more stable indicator of whether a stock is under or overperforming, and we buy or sell respectively on where those averages are. So that's known as a moving average crossover strategy. And you generate buy and sell signals based on when those moving averages intersect each other. And so the configurations in this example would be what the average length would be for the fast moving average and what the length would be for the slow moving average. It might be 1 month for the slow, it might be 1 week, it might be a day. That's a configuration which you're going to have to potentially optimize with an algorithm. And so you end up with lots of different strategy configurations. Think of those in that short and that long moving average window. Okay, these are 2 parameters, for example, but it could also be how much you trade. Maybe when the short moving average is very far above the long moving average, you would like to trade proportionally more than you would if it was just above. So you can adjust how much you trade as well. You could additionally set confidence intervals so that you only trade once you're sufficiently far above, and determine that sufficiently using some sort of statistical model. And so we generate a trading decision: buy, sell, do nothing. And then ultimately we measure how we perform using what's known as the profit and loss, the P&L, or the drawdown. And so this is a very, and so then you can add in machine learning. You can take some configuration, you can take some data, you can engineer some what are called features. These are input variables. You can then build a machine learning tool to make a decision for you, which optimizes your profit and loss, or some combination of profit and loss, and maybe you don't want to lose too much any period of time, you'll draw down. And this is a very powerful way of automating trading with an example of machine learning, but it's much more general than machine learning. You'll learn about the market knowledge. There's a lot of knowledge needed to sort of understand how to plug your skills into this industry. And we're also going to look at decentralized finance. I spoke a little bit about it at the beginning, but this whole area became very interesting about, let's see, about 13, 14 years ago, with a white paper that was issued by somebody where we don't know whether they're real or not, Satoshi Nakamoto. Some of you may have heard of Satoshi Nakamoto, but he posted this paper. There are hundreds of thousands of papers posted every year, but this one really caught the world and set it on fire because it laid out the basis for a global payment system. It was fully decentralized, and this came in the wake. The timing was everything. This came a few months after the collapse, the largest bankruptcy in the world, the collapse of Lehman Brothers, where I happened to work, and not at that time, but I worked at Lehman Brothers. It was at the time one of the most prestigious, largest investment banks, and it crashed, and it caused a ripple effect in the economy with a number of banks crashing. And at that time, the world lost faith in the banking system, and they said, let's rebuild a new version of it. Well, that hasn't quite come to be yet. Something different has emerged, but there are still many at the core of it. There is that yearning to build a more transparent financial system, which doesn't rely on taxpayers' money to bail them out, which is safe and secure, and is the cornerstone of a democratic society, is to have a stable financial system which is not corrupt. This is really a problem when you send money. For example, if you want to donate money to children in Africa, and you're in the United States or Europe or Korea, for example, you want to send money because you see some starving children in Africa, it's very difficult to send money to them. It has to go through various different intermediaries within Africa, and oftentimes corrupt government officials will take that money, and that money will never reach the people that you wanted to send money to and help. And so there's a lot of corruption in this world. There's a lot of what are called offshore havens, where money gets stolen and then hidden. And this is before Bitcoin. This was, a lot of money gets stolen. There's a lot of drug money moving around the world, which is financing illegal activity, legal logging of the rainforests, sex trafficking, exploitation of child workers. A lot of bad money is linked to financial institutions. And blockchain offers the ability to make all these transactions transparent. And so you can at least now start to find the criminals, as opposed to not knowing where they are at all prior to 2008. So there's a lot of problems with blockchain. It's not all perfect, but it is a serious contender for dealing with financial corruption, and at the scale that we typically see right now across the world, where a lot of the money is being controlled by mafia, drugs barons, and so forth. And banks have a very difficult time actually tracking that money. So there's a lot of very compelling reasons why we'd like a blockchain as a basis for a healthy functioning democracy, a global supply chain, a global markets where there's one currency, or many currencies that can be traded. And now there are all these different cryptocurrencies, and most of them will be gone within 5 or 10 years. Some of them will be here, and this is very much an experimental stage. And I personally wouldn't put a lot of confidence in the current setup with Bitcoin and Ripple and Ethereum. But I think it's much more interesting, the technology which is coming from these currencies rather than the cryptocurrencies themselves. And so what is a blockchain? I've spoken a bit about it a little bit, and I think it's worth me just saying a little bit more before we have time for questions and answers. But it's essentially a network where every node has a full copy of the data. So there's a lot of now redundancy in the network, so that there's a copy of some data. It could be the transaction data. Supposing you're wanting to make a transaction and send money to somebody abroad, there's a copy of that information, the value of that transaction, the value of the currency you're sending it to. And so it's not just sitting on one machine, which could fail, for example, and so these nodes evolve and pop up very dynamically. There's also the same software that verifies does all the checking across this network. And each node itself is only connected to a few other nodes. And importantly, there is no trusted node in this network. So you can assume that by default, that there are bad actors everywhere, and that everyone is trying to essentially be hackers and malicious. And this is the starting point for this new financial system. We started on the basis that everyone is trying to steal money and cheat everybody. And then we create the algorithms to essentially decide who is being honest and who isn't. And so how do we know who is being honest and who is not being honest? Well, what we try to do is we create what's the blockchain itself is just a collection of data blocks. It's what's known as a distributed ledger. It's essentially a book keeping track of all the different transactions in the way that you might keep a logbook of your spending, for example, or in a spreadsheet. But it's not just a spreadsheet. It's a sophisticated set of tools and infrastructure that allow it to check whether any entry in this spreadsheet is actually valid, or if somebody is actually reporting a false transaction or some false data. And so what happens is if any node sends some false data to try and game or scheme the system, then there'll be a conflict with some of the other nodes which are sending the true data, and there'll be a lack of consensus across those. And one of those nodes will then no longer start to believe one of the other ones, which is known as a peer. It's the peer-to-peer type model. And so the chain data itself contains lots of financial transactions. It's recorded forever in the history. So once a transaction is made, if you buy a coffee in Starbucks, pay Bitcoin, that's forever stored in the blockchain till the end of time. And so you can look back in 50 or 60 years and you can see your transaction. And right now, if you make a transaction and you want to go back and check it, banks will usually only hold it for about 5 or 6 years or 7 years. If you want to look back and see what you did 20 years ago, you cannot do that today. And you could say, well, why is that important? Well, it's very important when you're trying to trace crime, when you're running a company and you're trying to understand your expenses and how that's changed over time. And also, of course, you need to know that it's reliable. It hasn't been manipulated by somebody who's gone through and suddenly decided to remove all transactions with a certain entity in South America because they've become known as being a bad actor. And so it's the truth. And the truth is essentially achieved by solving the authenticity. Do you really have the funds you say you have before you make a transaction? And it's also checking the double spending problem, that you're not sending or not using the same funds twice. And so, for example, if in a very simple example here, where somebody, say Jim, sends Bitcoin to Chris, then they can use 2 Bitcoins, and they can essentially, one might be used by a miner as a reward for processing that Bitcoin, or they can send Bitcoins across multiple wallets. For example, Elon Musk sends some Bitcoin to Joe and Tim. Then there's a small amount that's needed also by the miner in order to make that transaction happen. And so we don't, this isn't a lecture in blockchain. We're just going into a little bit more detail about what it is and how it works, so you can get an understanding of the kinds of skills that are needed in order to develop and write software on this platform. So you could, for example, write a payments processing application. You could write a trading application. And in fact, many of these already exist. There are now digital exchanges, crypto exchanges linked to crypto, but there are also exchanges on the blockchain. That is what's known as decentralized finance, when it's actually directly on the blockchain, as opposed to off the blockchain, but using tokens which are on the blockchain. So if you use, for example, any of the main central exchanges, then you will find that they are not on the chain. They're not on the blockchain. Rather, they take all the coins and they sell them, but you have no knowledge of who's selling and what. It's not really a blockchain application at all. So most of crypto today is not that most people experience in retail is not really a blockchain. It's sort of something else. But the blockchain world is evolving, and that's much more exciting and much closer to Satoshi's vision of a global payment system, which is all on-chain, transparent, and can be solved. Now, some people are unhappy with this because it's very energy intensive. That problem is now being solved. And so now much more environmentally sustainable, low energy versions of blockchain have been developed, which use what are known as proof of history or proof of stake instead of mining. So you'll learn all about this. You'll learn how blockchains work, but more importantly, you'll learn how to develop applications on this blockchain. So what skills will you learn by taking this program? Well, I think we have to remind ourselves why fintech is important. It's a very important tool for people to get access to funds, mortgages. They can buy a house, they can go to college. Companies rely on borrowing a lot, especially during hard times, and small businesses will go out of business if they can't access cash. And also remember that in a world where we're trying to move away from oil and pharmaceuticals and some of the bad companies, we'd like to be able to invest in more sustainable technology and companies. And so people would only have sustainable companies in their pension portfolio, for example. And so we need to be able to track the activities and the data and see who's doing what and who's cheating and who's lying. There's a lot of corruption, a lot of sort of misinformation as well. And we'd like to use machine learning to detect disinformation campaigns as well. There's a lot of ransomware being used, for example, by activists, for example, in Russia, to hijack companies and force them to pay a ransom. And so you'd be able to learn these skills in how to develop models, how to work in traditional markets like algorithmic trading, risk management. You'd be able to formulate robo-advisors, which help you make people make decisions, life decisions, when to send their children to college, which area to live in, when to change jobs. Based on if you upload health data, it might tell you to manage your wealth differently because you know you're going to have health problems later on in life. The possibilities are actually frightening when you think about it. If a tool, an algorithm, knew everything about you, knew about your genes, knew about your job, knew about what you do on social media, knew about your education, knew about your family, how would it advise you to spend your money? If it knew what sort of a person you were, are you more likely to be a gambler or an addict? Are you more likely to have mental health issues? Right? These technologies are being developed as we speak, and it's very important to understand there's an enormous ethical component as well in this area. You're not just developing applications to make someone wealthy. You are part of the digital economy, and you'll be building that. And so there's an entrepreneurial component here. You could be creating a startup through our Kaplan Institute of Entrepreneurship. And you would have access to venture capitalists who could fund your ideas and help you build and run a startup company. Or you could simply just work for a company and, and write some source code and maybe work from home. It's very, very flexible. You will learn how to model parameters from financial data, which can tell you about the behavior of the markets, the robustness of the markets. The parameters might tell you, for example, how the economy is performing, in macroeconomy, consumption, consumer confidence. Could be telling you about shipping and what's happening in terms of national shipping information, or if there's a tanker, for example, stuck in the Suez Canal, can your model correctly account for that and adjust the price of the stocks or others. So there's a lot of big data linked to these models. It's not just looking at a spreadsheet. It's being able to get much more rich data from alternative sources and being able to then apply machine learning tools to make identify the patterns and irregularities. And you're going to develop strong programming skills, not only in Python, which is one of the most important Python skills. And I'm just going to, at this point, have a poll here because I'd like to know how well you know Python already. How many people here know Python? I think we have a quick poll. Maybe you could just answer that and tell me your experience with Python. Have you used it before? Maybe not. Do you know some? This is an anonymous poll. So, or are you an expert? And if you're an expert, you would know what a list comprehension is. You would know what the global interlock is. And by the way, by the time you finish this course, you will be an expert. You will know what these are. You'll know all the ins and outs of Python at a level where you will be considered a very reliable core member of a technical team, not just somebody who can speak about the technology or even set forth a vision for product development, but you can build it yourself. And that's where there is a requirement and a huge opportunity if you can do that, and you like finance too. That's what people want. They want people who can program, who know a bit of math, and are passionate about financial technology. Okay, well, I think I got a good sense now. So the polls come in, and it looks like some of you have never used Python before, and that's fine. We do a boot camp over the summer, and we do a lot of introductory sessions. So if you've never programmed before, or maybe you've programmed in a different language, like MATLAB, for example, then you can learn Python right from scratch. It will take some time. It won't happen overnight, and you'll learn about the data structures and algorithms that are useful in Python. If you know some Python already, then you're going to learn a lot more about how to grow those skills to use, for example, pandas for data processing. You might, for example, learn how to use TensorFlow, which is a machine learning tool that has a Python interface. Or you may be using, if you have moderate experience, you may well be learning better ways of programming, maybe object-oriented programming, or faster ways for handling big data, how to write and interact with compressed data to scale up to terabytes of data. You'll be learning, for example, how to write production-grade code that doesn't fail and handles error handling correctly, not just code that you run on your laptop, but code that can be deployed across a financial institution. So you're going to learn a lot of very important skills. Some of those will be optional, depending on your career preferences, and some of those will be, are absolutely necessary. But you're going to come out of this program as a very strong programmer, even if that you find that a little bit scary. That's what we want, because at the end of the day, that's going to get you a job anywhere, and more importantly, it's going to get you, a position where you feel less stressful because you know how to handle and write code properly. And we're going to impart how to program. I've been programming since I was 8 years old, which is a long time. and I can tell you a lot of tricks for how to write code very well, how to debug your code and not waste hours and hours. I can unit testing techniques for minimizing error. It does carry a lot of responsibility. If you're running code in production and it fails, the financial institution could lose millions of dollars. And so you will be compensated very well, but there are responsibilities, and knowing how to write production grade, robust techniques that are mission critical, the kind of level of programming that NASA might do for their mission critical systems so that they don't fail, can be very useful in financial institutions. But there's a lot of money at stake, and the bugs can be absolutely disastrous. And there have been many cases of silly computing code errors that have cost companies millions of dollars. And so you'll learn Python. You'll also learn R as well for some of the more statistical focus topics. R is still used a lot in finance, particularly for quantitative research, less so for, and it's not used for production code, but it is also a very powerful tool with a lot of useful libraries and additional tooling that can be very helpful. For example, there are sentiment models that you can plug in very easily. There's more diagnostics, so you can learn how to do machine learning or statistical modeling with a bit more rigor. And then you're also going to learn how to program in Solidity, which is a language developed for programming and building applications on Ethereum, which is one of the blockchains I mentioned. And so this is a compiled language. It's not an interpreted language, and you'll learn how to do that as well. Now, the requirements for programming, of course, are one of the main focuses of this program, but you'll also get familiarity with data. What types of financial data can I use? How do I access it? What libraries are specific to FinTech and how you manage and work and visualize the data. And also, of course, the application knowledge to be able to build applications that make a lot of sense. So you can talk to a trader, you can talk to a risk manager, and they'll understand what you're talking about because they're not trained as a developer and they don't think like a developer. And it's very important that you can interact with them. That's what the most important positions are in the finance industry, are talking directly to the executives who want to make decisions and need people that are technical. Okay, so that's sort of in a nutshell what you'll be learning. The focus on the programming, very important. And let me just sort of close today's discussion. And of course, feel free to start posting questions in the chat. But the application screening has already begun for August 2022. There is a summer boot camp which will be held in the first week. That's to be decided, but that's typically around about 15th of August. And that will be recorded. You can join virtually. You don't need to fly to the United States and be here by that time. And of course, if you're in Chicago, you can come and join us in person and get to meet us. Of course, if you're in the United States, then you can attend in person if that's your preference. And also, you can, as a next step, if you're interested in this program, you'd like to learn more, you're not sure whether FinTech's right for you, or you're not sure whether you should do data science. There's an overwhelming number of choices that you face as a student deciding how to advance your career. You don't know whether you might work in trading, risk management. You don't know whether you want to work for a startup versus a big institution. Maybe have your own startup idea. So come and talk to me, and find out whether we can help you. And if you just type this link in to your browser, maybe just take a screenshot, or I can just put it in the chat so you can copy it. Then you can just select a time to talk with me, and we'll just, to keep it so that everyone has a chance to talk, you can just post, just select a time, and then we can set up a Google Meet, and we can chat, or you're welcome to set up a time to meet me in person if you prefer. So that's all from me. I'm just going to put this in the chat area so that you can select it, because right now you can't really copy and paste it. And if you have any questions for me, and you want to post those in the chat, please do so. Otherwise, I look forward to hearing from you if you would like to learn more. And we have some additional information as syllabus that we can provide. And I can talk to you a little bit about the entry requirements and what you would need to focus on if you have particular career preferences, so which electives you would take, also the part-time versus full-time options. I'm sure you have many questions, and I'd be very helpful, very keen to help. And again, you'll be joining one of the most important financial centers in the world. Chicago is a booming area for fintech. It has been for a long time. You'll be working with some of the most helpful, knowledgeable professors in the area, both on the math side of things and also on the technology. You'll have access to cybersecurity courses, entrepreneurship courses. You can even take a course in law if you want to learn more about the blockchain and ownership rights. So there's a huge ability here for you to customize and tailor your career. And this is an excellent time to be joining us. So thank you very much for your time. And I'm going to stay a few minutes over, and if you want to have any questions, I'll service those in the chat. Otherwise, I very much look forward to hearing from you. And I have lots of good things to say to you if you speak to me. You sign up here. I'm an author of a book on machine learning and finance. You'll get a copy of that when you join, and it's going to be a lot of fun, and you'll also learn a lot, and you'll have access to work with a company for six months as well, and that will be a great opportunity for you for your resume and your profile.